Hello everyone and welcome to another Connecting Africa video interview. I'm Paula Gilbert, the editor of Connecting Africa, and joining me today is Joe Mucheru, who is the president of mobile financial services platform JUMO. Hi Joe, it's so nice to have you.
Thank you, Paula. Hi, good afternoon.
All right, so let's start off with a bit maybe about JUMO and the work you're doing in Africa and maybe how the company's evolved since it started back in 2015.
Yes, so JUMO is a fintech company, and really and I'll try and make it. It's technically in the fintech business, but we provide the platform that many, whether it is financial institutions or mobile network operators who have the distribution, will actually use as banking infrastructure to be able to lend to. I would say people who have ordinarily been excluded. You're talking of small amounts of money that is being lent. So we've built a
Yeah.
platform over time that facilitates for multiple lenders to be able to lend to multiple people and do so profitably. And at the same time, everybody in the whole ecosystem is able to benefit from this whole process. So, you're lending money, you don't lose the money. The person that receives is able to repay the loans. And so they're not again blacklisted from receiving any money. So we're in that space of really trying to create more inclusivity, but do so profitably.
And your reach is quite big now. I mean, maybe just give me some of the numbers in terms of how many loans you've given out, how many people you've given loans to.
So loans, we've now done about 6 billion. I think it's last week that we crossed the $6 billion in terms of distribution. We've done this to over 25 million people. We're now operational in about 8 countries. By the end of the year, we hope to be in about 11, 12 countries. Those are work in progress. And, we've seen, a lot of our consumers are, small businesses. We have individuals also that are using our services. So it's quite broad, and we are happy. We're almost doing a loan per second. So it's good for us, and we hope now we can scale that and expand.
Yeah, that's a lot. I mean, wow, a loan per second. So you mentioned you're in
Right.
quite a few markets already and you've got a few in the pipeline. So where are you launching
Yeah.
next? And kind of what's the strategy around picking those countries that you go to next?
So I think the first thing is, again, as a business, we work on the mobile space. So in fact, JUMO itself, when you think about it, it's just mobile. There are those who are saying JUMO stands for just money, but actually it's just mobile. So we've been working closely with the mobile operators. This is MTN, Tigo, Airtel, and others that we are talking with. And the idea is that in each of the markets, we have an agreement with them. So they will tell us, let's go launch in Ghana, let's do this in Kenya, let's be in Zambia. So part of the strategy has been working with them and looking at their markets. It's also partly because of the regulations in the different markets. Some markets, you require licenses, and those licenses take time to get. Others, you can actually launch with maybe a banking partner's license. So each market has been, I would say, a different experience. So, we're in all the 3 East African markets of Uganda, Tanzania, Kenya. We're in Zambia. Recently, we are in Cameroon. We are in South Africa. I mentioned Ghana. We're in the process of getting Nigeria, Cote d'Ivoire, Benin. These are all the different markets that we're operating and expanding in. We've shrunk a bit from the rest of Africa because we were in India, we were in Pakistan, but we've actually said let's focus first on the African continent, and later on we can expand out even outside of the continent.
Okay, very interesting. So I also know that JUMO uses artificial intelligence and machine learning, to build your credit scores and the financial products for people that maybe previously would have been excluded from this kind of service. So can you just tell me a bit more about how that actually works? How are you using that AI, and how does it help people who maybe don't have a credit score and those kind of things?
So traditionally, the way banks work, you get, this is the scores that you would actually have for individuals. They tell you, this is the data and information that you need for each individual. Then, in most cases, it would be getting your bank history. It would be, about your transaction and so on. So when you come to users or, consumers who have ordinarily not been banked, then you have to find alternative data. And so what we've been doing in the last 7 years is we get, for instance, data from the mobile operators, their calling data, the mobile money data, and of course, all this we get with their permission. It's not that we're given the data without the user saying they want the service, so they approve for us to get their data. So we get that data, and from that data, you're able to now extract different features. Based on those features, you can come up with a credit score. And that credit score then allows you to say, we can lend to this person, maybe we cannot lend to this, and so on. And then it takes time because you have to take time to understand what are the behaviors of people. So somebody who has this kind of behavior, this is the kind of phone they're using, this is the process within which they go through, whether it's USSD on the app, the speed at which they're able to transact. It gives you a lot of insights. This is how much money they've been transacting and so on. So you have all that data. So over time, we have been able to do now over 200 million loans. And with over 200 million loans, then across different markets, you're able to then take an individual's, we call it a thin file, compared to what we have in the past, and be able to come up with features. So I would say, in the past, it would take us maybe 2 weeks, 3 weeks to really be able to take the data, analyze, come up with features, and be able to understand, where do you place this person. What AI does is that it's able to now take all this data and process it in a much quicker way. So you're able to take, from that thin file data, whereas maybe we were extracting something like 700 to 1,000 features, AI is able to now extract, for us, the experience now, over 15,000 features, which you can use to compare. So you can become a lot more granular in being able to understand this person, their ability to repay, what length of loan they need to get, and so on. And then when you take that and compare it with the data that we have of over 200 million loans, then you can become very precise and understand, where you place a person. And so what machine learning and AI are allowing us to do is really to be able to process the data very quickly. In a sense, it's also unbiased. You get the data and you're working more from the data than what individuals, who are maybe coming up with the score before looking at the features. There are certain things they would think through and maybe introduce bias. Here you have efficiency, you have speed, and with that you can be able to then work faster. So when a consumer asks for a loan, then in a very short period of time, you're able to qualify them, you're able to score them, and be able to provide them with a loan. And
Yeah.
that's what we're doing with the AI. I've tried to make it as basic as possible, not technical. I'm also not too technical on that area, but it's really making a difference for many people.
Yeah, no, that's great. It's great to hear, how it's working and like you say, making a difference for people. So how are you seeing AI overall and this new buzzword of generative AI kind of changing the fintech landscape? You guys have obviously been using it for a while, but what trends are you seeing emerge in the industry?
I think the biggest trend for me that I'm seeing is that a corpus of people who are totally excluded because there was no data available for them. There was no reach, the normal, I would say the banking system would use to be able to qualify people. Now it's becoming a lot easier so that, the partners we have, the banking partners we operate with are now seeing the huge value that AI is actually providing. The regulators themselves are also seeing that technology actually is making a difference. When I look in some of our markets, the regulators have now evolved where they've got within the regulator, the central banks, there's a fintech office that is being set up. Whereas before it was just banking, now you're seeing fintech office because they are seeing the scale, the speed, and the economics. So we are seeing that over time, you're probably going to see a lot more of the consumers being able to access many of the financial services through their mobile devices, through the digital platforms versus the ordinary traditional methods. So I think it's just growth of the new fintech space, but it's going to take time because I think the banking sector is still very important, especially for businesses. You need your letters of credit. There are many other services that are not yet being digitized, but it's just a matter of time that you're going to see that digitization process coming into play.
Yeah.
We are also seeing that many companies are also now beginning to trust and work with AI, whereas before, there was concerns that AI may not be able to understand all the nuances and so on. And the issue now with generative, it means that AI is also able to create new features, create new thoughts, new views that ordinarily we are not seeing even as humans, which has actually been quite good. But of course, we've been doing this with a lot of caution to make sure that no biases. We're not just allowing computers and technology to take charge.
Yeah, I think there's a lot of discussion around it at the moment, but it's a very interesting space to see what's going to come next. You mentioned
Right.
regulation, and I know you were previously the Kenyan Cabinet Secretary in the Ministry of ICT, Innovation and Youth Affairs. So, just from your perspective, what do you think African governments and regulators could be doing better to aid fintech adoption in Africa?
So I think the challenge is usually understanding, and I'm not saying that they are not they don't understand. I think there needs to be enough data and enough experience for regulators to be able to say this is the direction we're going to take. I give an example of in Kenya when mobile money was beginning. The regulators really struggled. This is the communications regulator as well as the banking regulators to say, really, should we be allowing this or not? And eventually they agreed to allow the services, but it takes time to really understand what needs to be done. And in that sense, the regulators are waiting to understand. They need more information, and they're listening to the consumers, and the consumers are seeing that now we can be able to get money, we can be included in the financial systems. So in Kenya, I know we had some challenges where the central bank was saying maybe we should stop the digital lending, but now the regulator has actually included fintechs and provided the licenses to ensure that this is a service that is working. So it's a collaborative effort. I think the regulators need to spend time, understand more. I think there's many aspects of digital lending, all the way to digital currencies. So it's a whole new space, and it's just a matter of time, and I think we'll get there.
Yeah, collaboration for sure.
Right.
Talking about that, actually, I know you already partner with a lot of operators. You mentioned it, across the continent. But recently you had this partnership with MTN Mobile Money in South Africa. So tell me a bit about that and
Yes.
what you're doing in terms of loans in South Africa.
So basically, we've been operational and working with MTN, for a long time in other markets. But South Africa now became a key market. There's still a lot of consumers who are using mobile money and are keen to be able to get access to credit. So what we've been working with them is to see how can we reach as many of the people in South Africa that require these loans as possible. From our estimation and in the interviews that we've had, MTN is still to announce their results, but in the market there's already at least several, almost 19 million people that have access to the mobile money and are able to take the loans if necessary. So what we've been doing is from November we started providing just on the mobile app. Now we've launched the USSD version, so that somebody doesn't even have to have the connectivity. They can actually just use USSD. We ensured we've gone through the regulatory process, which was important so that we're able to lend. And then working with the regulators, making sure that you integrate with the credit reference bureaus to make sure you're not lending to people that you shouldn't, and also to make sure that everybody is kept within the right frame where you've got the right data, you're providing them the right information. So that's what we're doing with the MTN. We're seeing good progress, good growth. We have not, I think we need permission to be able to announce some of the numbers on what is going on, but we're quite happy with the progress that we're making. For a long time, it had been said that South Africa, was sorted. They didn't need mobile money or digital lending because the banking infrastructure is very strong and robust. But we've seen actually there's still a huge number of people that are still interested in these services, and we expect as we report, you're going to see the good progress that we're making.
Yeah, mobile money's had a bit of a tricky history in South Africa, but it's good to see that.
Yeah.
I'm sure there are pockets that are still, missing these services, and that's a way to reach them. Kind of on that, I
Right.
know you offer services obviously for smartphone users, but also for feature phone users. So, how have you seen smartphone growth in Africa, impacting the market and these kind of financial services products? And also, on the other hand, why is it still so important to still have options like USSD for feature phone users?
So there are several things to look at. So the consumer, you have to be able to assess how you reach the consumer and what services you provide to them. A lot of the smartphone users obviously must have good electricity supply because they need to continue to charge their phones. The phones are more expensive and therefore they're able to borrow more and so on. But it allows us to do even more analysis on that person. So you can be able to tell from smartphones even the battery life of that individual each time they're coming to get a loan, and that will even go towards their score in terms of determining which way they're going. We're seeing that there's a lot of growth, at least on the smartphones, but it's not significant enough compared to I would say, feature phones. And even those that are using smartphones, some of them are still using USSD. Um, USSD seems a lot easier for many people. And with the feature phones, this is almost like a bank account. This is where people have their money. So you'll have people who have specifically a phone for their mobile money transactions. That phone is charged maybe once a week or once every 2 weeks, because again, in some of the places we are trying to reach, they don't have access to continuous electricity. There's load shedding in many parts or no grid at all. So they go to a center, they charge the phone, and then they go and use it. So smartphones are not always the easiest to use because also you need to charge maybe every day or every other a day. So we are seeing that there's still a lot of adoption on USSD, but over time, as power becomes available, and as people become more comfortable with using the smartphones, then we'll see that area grow. But we've specialized in both, and so for us, we are able to service consumers in either of them.
Yeah, I think it's very important for financial inclusion of low income households to still have those options, because I think often people outside of Africa don't realize how huge the feature phone market still is on the continent, right?
Right.
So I know we've spoken a lot about loans and it's a big part of your business, but you do also offer savings and insurance products. So I'm just interested, what do you kind of think is the next fintech product you guys are going to start offering, or maybe where are the gaps in the market?
So I think first we're really at the infancy of this sector. I think when we look at the numbers, we've mentioned, we've served about 25 million. But when I look at the latest GSMA report, it's saying there's 781 million in Africa, people that are using mobile money. And when you look at how many of them are being served, the numbers are huge. So first, there's the loans, multiple loans, products, whether it is just basic access, whether it is having a multi-loan, whether it's an overdraft service. So all those different credit products are in place. But we're seeing that savings is also becoming important. And there in some markets, some of the users want to be able to save, and some of this could be for a specific project that they have. Maybe they want to save for school fees, or they want to save for buying some equipment. So we're looking at those products coming in. Insurance is obviously going to be a very big one, but it still requires a lot of education for the market. And then of course ensuring that the way you structure the product, it's able to reach everybody where they are and you can verify. The thing with the technology is, you can service from one central place as many people on the continent, but some of the products that require for you to go verify certain things, then they require a different model. Maybe you have to have local presence, and so we're looking at those different products, but the core lending products are still huge, and savings is more or less similar to investment. And so those again, they're still controlled to some degree by the regulators. So we are working with the regulators to look at how best to work, because savings and deposit taking are seen as financial services that need to be regulated even at a different level by the central banks.
Yeah. Obviously,
Yeah.
we've seen a huge fintech boom over the last few years. There are a lot of companies that are now offering mobile financial services. So I'm interested from your point of view, how competitive is the market at the moment, and kind of what makes JUMO different to maybe your competitors?
So I think there are different, I would say, fintechs. There are those that have been actually just lending with cash. There are those that are lending based on airtime, airtime credit and how they can use. And we've seen many come into the market. And one of the challenges that has been is that many of the loans given are unsecured. So the way people have maybe some of the companies operated is that they give the loan. If you're not paying, then there's they will call you, they will call even your mother-in-law, they will do all manner of things to try and recover the money. They have access to your data or your contacts, and so they send messages. So those are some of the challenges we've been facing, having been here for quite a while. The new people come in and create some of these challenges, and so the regulators react very fast and say, then we need to stop this sector. But I think with the data offices, data commissioners that have also come in, and the regulators tightening up, it has allowed the market to now protect the consumers, to ensure that when you're lending to someone, you must do so even ethically. So for us, we make sure that when we're lending you any money, we know for sure that you're going to repay. So if you're not repaying, then we also take part of the blame, not that it's purely on your side. And because we've been building a platform where you've got many of the financiers coming in, as well as the distribution partners, these are the mobile operators, then we're making sure that everybody in the system, in the ecosystem, actually makes money or benefits. It's a win-win-win for everybody. So we've differentiated ourselves by being a platform, by being the engine that's providing the banking infrastructure, the scoring infrastructure, and also managing multiple funders into that same environment, so that if you want to come into, say, the South African market, we can have even up to 10 different funders to reach the same consumers, but make sure none of them is disadvantaged. They're all making money. So we've separated and shown ourselves more on the infrastructure provision. So we are looking at our revenues more from the platform revenues as opposed to lending. So many of the digital providers are really looking at lending and making money from interest. Really, for us, it's mostly from the platform fees, and that's what we really want to grow, and really be in many ways neutral in making sure that we're providing whatever mandate we get from a financial services provider, a bank. Some of them want to bring in impact money. Others want to make money. So whatever it is that the mandate is, we make sure that we fit that mandate and are able to provide, a win-win solution for each. And that's really how we've separated ourselves. It requires a lot of hard work and time, and it looks like it's paying off as we go.
Yeah, it does sound like a lot of hard work, but
Yeah.
it also sounds like it's paying off. Okay, so maybe just
Right.
finally, maybe you can share a bit about JUMO's strategy for growth, across Africa, maybe over the next 2 years.
I think, as I mentioned, one of the big challenges is Africa is very big, it's very vast, and we've been looking at the regulatory environment. I would say in each market we open, the demand is really high. One problem we don't have as a company is the demand side. I would say the demand we are getting in each of the markets where outperforms, the supply side. So sometimes, it's taking us time to get approvals from the regulators, because in most cases you have to get approval for the product as well as the brand that you're launching in each market. So our plan is really to scale in terms of how much we're able to lend to our consumers, how many countries we're able to get into. So we are already, as I mentioned, looking at 3 new countries that we want to offer services to, and we're looking really at the regulatory approvals. As soon as we have the regulatory approvals, then we'll go into the markets, and ensuring that as we expand, there's all the different challenges we also face with some of the currency risks in the market, making sure those are hedged. But we have seen that the demand is great, and so we want to make sure we are providing the supply as much as possible. So excited about the next 3-4 years, and looking forward to serving the continent really well.
All right, well, I think we're going to have to leave it there, but a big thank you to Joe Mucheru, who is the president of JUMO. I really enjoyed chatting to you today. Thanks very much.